We have major breakouts on the yearly and the quarterly saying that this cup and handle is going to be accelerating. This cup and handle suggests 3-digit silver. So it is not too late. We're probably headed up into mid 3 digits.
If you use the analog of the last two critical minerals that we put on the list and what they did, those would be lithium and uranium. So when we put lithium and uranium on the list, in 2 years, I don't have the prices in front of me anymore, but I did the analog and I did the math, and it puts this is crazy. This is the crazy one. Okay, so if you use the analog of lithium, it puts silver at $140 in 3 years. Okay, if you use the analog of uranium, it puts silver at like $85 in 3 years. So that's what a critical mineral does.
The paper market may try to bluff, but the physical market never lies. Silver buyers are circling, and the battle between paper promises and real metal is reaching a breaking point. Mike Maloney's insights highlight a critical divide between physical buyers and paper traders. While short-term market participants often react emotionally to dips, long-term physical holders see them as opportunities. UBS shifting its silver outlook toward record highs further validates the perspective that physical metal is poised to lead the next major move. The East, especially China, is playing an increasingly dominant role in this trend. With silver in Shanghai trading at a premium to Western prices, arbitrage has consistently drawn supply eastward. This dynamic echoes the dollar milkshake theory, only now it's silver being siphoned into Eastern vaults. The steady flow of metal underscores how Eastern demand is reshaping global price discovery for both gold and silver, giving the East outsized influence in determining where markets head next. On the charts, silver has broken through long-standing ceilings, confirming a structural shift. A quarterly close above $40, the first since 1980, signals a historic breakout, with a giant cup and handle formation suggesting far higher levels ahead. With prices already pushing past $44 and momentum at multi-decade highs, silver appears primed for an explosive slingshot move. Coupled with today's more fragile economic backdrop compared to the 1980s, the setup points to a potential rally that could redefine the precious metals landscape for years to come. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Physical buyers are circling. They're not scared of this dip. They're waiting for it because they know a secret. Sellers of paper contracts who can't deliver are playing a dangerously risky game. You can't print physical metal. And then here, UBS raises its forecast and says silver is headed for all-time highs. Now we know which one of these bandits have already covered their shorts. So this is the article about UBS raising their estimates for silver and admitting that it can go to all-time highs. And no big investment bank like this wants to start promoting something until they've changed their position from being short to being long. So UBS is now probably in a position, if they're saying this, they're probably in a position where they can make gains from silver going up instead of having a motive to keep suppressing it. And from Make Gold Great Again, President Xi of China has 3.56% more suck on his silver today than the West. And this is Make Gold Great's silver milkshake theory. I love that. My friend who lives here in Puerto Rico, we used to live just a couple blocks from each other, made up the dollar milkshake theory. So here we have the silver milkshake theory. And if you take a look at this, on the same day, the price of silver was $42.20 in the West, but in China, it was $43.70, 3.56% higher, and that arbitrage causes silver to start moving from west to east. It's not a good thing for the West to have that arbitrage, but that's where the silver is going, and a lot of it's the East that is driving the prices on gold and silver right now. SRS Rocco report. The silver price has never, now this is old. This is from the beginning of the month, September 3rd. The silver price has never closed above 40 on a quarterly chart. $40 is an important level not hit on a quarterly basis since 1980. A close above 40 by the end of September and quarter could suggest even higher prices. So let's take a look and explore this a little bit. Here, I'm on stock charts here. And so this is a daily, and it's a line chart. And here's the thing about line charts is line charts on stock charts is basically connecting the dots of the close price. It doesn't have the intraday information in there. It's just the close. So if we select daily here, that's what it looks like. But then we go to weekly. Still looks very similar. 44.05 is what stock charts says that silver closed at. But you can see this cup and handle, even on a weekly, is almost done. It's almost completed. But now let's go to a monthly. And what we see is that it's almost very close. The cup got tilted a little bit. So the intra-month price action is not there. Now, if we scroll down, we go to quarterly, and bam, we have had a major breakout on quarterly. Let's take a look at yearly because this had already broken out before. And there's yearly. We have major breakouts on the yearly and the quarterly saying that this cup and handle is going to be accelerating. This cup and handle suggests 3-digit silver. So it is not too late. We're probably headed up into mid 3 digits. And if we go back to the daily, this bottom down here was, I think it was $3.50. So the difference between $3.50 and these $48 highs, you've got to at least flip this upside down, and that is the minimum. But this is on an exponential chart. If you flip it upside down, it wouldn't just be adding that $47 or whatever this is. It would be far, far, far beyond that on a logarithmic chart. That's probably where it's heading. So from VBL's Ghost, the only silver chart that matters is the annual close. The lid is off, kids. And this is a great chart because it goes all the way back into 1802. And you can see the super spike in 1980. And we are going to be headed for a bubble far greater than the 1980 bubble. The economy wasn't in such dire straits back in 1980 as it is today. Everything is far, far more out of balance than it was back then. Coinstacker says, cup about to runneth over. And I was one of the very first people, I think the first one, to identify this giant, everybody was focused on this cup and handle right here back in 2023 because it was suggesting a big move coming. And the big move, I kept on calling it a slingshot move. These green candles here, that's the slingshot. But then I accidentally looked at a 50-year chart and I went, oh my God, look at that. And so we are headed for some big, big all-time highs. And just one thing to wrap up here, silver has been marching forward and creating a 14-year high after a 14-year high after a 14-year high. And here we closed above $44.
Vince Lanci highlights a fundamental shift in silver's market behavior. Traditionally, investors treated silver as a cyclical metal tied to economic activity, selling it during periods of stock market strength while favoring gold as a haven. That pattern has broken down, with large macro funds now pouring into silver despite its volatility. This change coincides with evolving global demand trends. India shifting towards silver as gold becomes too expensive, and China diversifying into silver and platinum for similar reasons. The result is a market where silver is holding strong even without its usual physical demand base, a clear sign that new investment flows are driving prices. At the same time, policy moves are adding fuel to the fire. The U.S. recently designated silver a critical mineral, allowing for government stockpiling, subsidies for new mining, and potential supply deals with Mexico. History shows that when lithium and uranium were given the same status, their prices surged dramatically within just a few years. Lanci argues that the same trajectory could push silver to $85 to $140 over the next 3 years. Combined with persistent supply deficits and renewed institutional buying, this creates a powerful setup where silver's bull market looks far from finished, offering both short-term momentum and long-term structural support. Let's get back to the interview.
I mean, I don't disagree with Jordan on anything on this, and I want to add just different perspective. He was talking about money flowing in. I'm going to talk about that very quickly. And he was talking about a breakout, and we're going to talk about it as well. Some of this we talked about. He and I have talked about on his show when we do our monthly. And the first thing is money flowing into silver versus stocks is strange, something that he said. And so I'm here to corroborate that, to say that in a normal environment, an environment where things are behaving normally, there's no geopolitical tension, what will happen is American investors will buy stocks. They're always long stocks. And if they want to hedge a recession, they'll sell copper and they'll sell silver because silver is 50% economic, and they won't sell gold. And when the higher the stock market goes, it seems like the more silver lags it, and we've seen that with gold as well for different reasons. Now, something changed at the end of, I think, this year, 24, leading into 25, but silver caught fire from those macro discretionary guys, the guys who bought gold for 6 months to a year at a time. And silver's not a market you do that with. I mean, when you buy silver, you know that you have to be committed to it because it's a roach motel if you're going to trade it short term, big volatility. And they're back and they're buying and they're the ones driving it. So now I'll give you the fundamentals of it compared to last year. And this is kind of surprising. And you could take it as bullish or bearish. Indian demand in 24 was off the charts. It's like, not off the charts, but the chart was like something like 88,000 tons, a little under 8,000 tons. This year, so far, it's very light, using this as an example. This year, it's very light, and silver's at all-time highs. So, not all-time highs, okay. All-time, non-spike highs, reasonable highs. I think, and I believe that Indian demand is slated to come back in the last half of the year. There were reasons for it. They were buying gold, but I've looked at some analysis, and investment demand is now picking up. And so in India, gold's too high, let's buy silver. Okay? That's what they're doing. In China, it's gold's too high, let's buy platinum. Right? And they're buying silver too for different reasons. But what I'm saying is if silver holds this level, this dynamic level, and there's no negative news that comes out on it, there are 2 reasons to own silver for the next 6 months, which would play into the spike high, and that is number 1, physical demand in silver in the BRICS has actually been low this year. Simultaneously, we have a lot of silver coming to the US, which brings me to point number 2. Number 2, as part of the protectionist package, Trump put silver on the critical minerals list. Now, it's not a done deal, but it's pretty much a done deal. They have to approve it. When you put a mineral on a critical mineral, even though silver's always been a critical mineral, they just never wanted to label it that way. When you put a critical mineral on that list, it opens up so many things to support that mineral's development. You need silver. So what am I going to do as the President of the United States if I need silver? Well, first of all, putting it on the critical list allows me to hoard it without telling anyone. I can just buy it. And that's what they're doing. That's what they're going to do. Number 1. Number 2, it empowers you to subsidize new mining. It empowers you to say, now, new mining is bearish because you have more silver coming up. But no, that's not what happens. The money gets spent on the mine. The cost gets passed through in inflation. It's kind of like the government's going to buy an ashtray. How much is the ashtray going to cost? $500 because it's the government. So the price goes up. Um, and we're going to buy it on the market. Right now, JP Morgan and other banks that deal in silver, they're shopping around, scouring the earth for scrap. They're showering for concentrate, for doré bars. This is happening. They've already been doing it for China. We're going to cut a deal with Mexico, probably. I'm guessing, speculating here, where we get a bigger supply. So the demand for silver coming from the U.S. is going to increase. Now, I just want to put a number on it. I'm not going to put real numbers on this. If you use the analog of the last two critical minerals that we put on the list and what they did, those would be lithium and uranium. So when we put lithium and uranium on the list, in 2 years, I don't have the prices in front of me anymore, but I did the analog and I did the math, and it puts this is crazy. This is the crazy one. Okay, so if you use the analog of lithium, it puts silver at $140 in 3 years. Okay. If you use the analog of uranium, it puts silver at like $85 in 3 years. So that's what a critical mineral does. So it's not tomorrow. It's not a spike high 6 months from now, but it is a market that's just gonna, I'm looking at the markets now. I'm sorry. The data just came out. I know you want to talk about it in a second, but I'm laughing because it's going up still. Anyway, uh, silver's supply deficit is not going away. It may be lessening, but I think the demand side of it is coming up from, as Jordan said, the funds that are buying it, the Americans that used to say, "Oh, I'll sell silver because it's economic," they're not doing that anymore. They're not doing it. They're picking on oil now, right or wrong. So I tend to think that, and this is where I think we actually agree like 100%. And I'm happy to be wrong. I think gold could be topping out. I want to see silver spike and reject before I get bearish gold. And we're not getting that. So it's the bull market climbing a wall of worry. If you don't think stocks are going to top out, you shouldn't be short silver. Let's put it that way.
Silver's story is no longer confined to cyclical demand or short-term speculation. It has evolved into a global revaluation driven by structural shifts in supply, investment flows, and policy. The eastward pull of physical metal, the technical breakout above long-standing resistance, and the recognition of silver as a critical mineral all converge to signal a new era for the market. With institutional capital entering, governments positioning for strategic stockpiles, and charts pointing toward higher price trajectories, silver stands on the edge of a historic bull run that could surpass past peaks and redefine its role in the financial system. If silver continues to attract both institutional capital and government support while facing ongoing supply deficits, could it overtake gold in relative performance over the next decade? So, stay tuned for clear, data-driven insights into the financial system. Be sure to like and subscribe so you never miss our weekly updates. Thanks for your support, and we hope you enjoy the video.